What things should you be avoiding after getting approved for a mortgage? Stay tuned for more. Hey real estate friends, what's going on? It's Mike Gold here with RE/MAX Alliance, coming at you today to tell you what you should not be doing when you get your pre-qualification letter. Your pre-qualification is the very first step in your home buying process. Ideally, you have done it before looking at homes, but if that's not the case and you've got it while you're in the process, that's okay too. But do not do these things to ensure your loan does go through. The first thing is do not close any sort of checking accounts. At this point in time, you've provided information to your lender and you're telling them these are your asset accounts. So if you go closing them, you'll now need to provide a letter of explanation as to why you're closing the accounts, and the lender might want to see you season any new checking accounts, which could delay your closing or your loan final approval process. Next pro tip is do not open up any new trade lines. I don't care if it is a Home Depot card, a card to go to get furniture shopping later on, and you don't make any purchases. These are new subsequent trade lines that could then decrease your overall credit score. Pro tip number 3, do not make any large purchases. Again, even if you are self-employed and you need to make large purchases for your business, please run this through your lender. And good grief, do not buy anything like a new car. Nothing is worse than going to the closing, getting ready to go to the closing table, and you find out someone decided to make a very unwise purchase right before they are going to be going about to their closing. Pro tip number 3 is be very careful with large sums of money, especially cash, coming into and out of your checking account. Unless, of course, you like writing letters of explanation. Again, the lender is going to be evaluating the ability for you to be able to repay a loan. And they're also going to be looking at the information you have given them as far as that ability to repay the loan. So any large cash transactions coming into your account will need an explanation of what is this money. And also, too, any large sums of money going out of your bank account will also need that same sort of explanation. So make your life and ultimately your lender's life job a little bit easier, and do be very careful about large sums of money coming in and out of your bank account. Lastly, point number 6, do not co-sign for any sort of loan obligation for anyone, even if you're not the primary person that is going to be paying back this loan. This new liability now shows up on your credit report, and its debt obligation now changes your debt to income ratio, and therefore your ability to get approved for the loan for your house can ultimately be subjected to a denial. So again, Mike Gold with RE/MAX Alliance, thank you so much for tuning in. If you like the information that you're receiving, give us a thumbs up. Better yet, if you're in the process of buying or selling a home, subscribe to the channel so that way you can be informed with relevant real estate content and information. Until next time.